If you want to become profitable in the stock market, the most important thing is to know key areas. Those areas will let you know when the best opportunities come to buy and sell that given asset that you are currently trading. In this video, I'm going to show you how to find those key levels using a few different support and resistance areas, and it'll make your trading so much easier and you'll be a lot more confident while you're trading. So without further ado, let's jump right into TradingView. So the stock that we are looking at right now, just as an example, this works for any asset that we are trading, but we are going to look at Apple. So the first thing that I like to do is jump to the daily chart. I think there was a survey that was done, and there was about 90% of professional traders and 90% of profitable traders have said that they trade based off of higher time frames, not lower time frames. Beginner traders like to trade off of the 1 minute candles and they like to chart off of those candles, but professional and profitable traders, they trade on lower time frames, but they find those opportunities from what they charted on the higher time frames. So I'll show you how to do that. So the first thing that we do is we jump to our daily chart and we try to find a trend. We can see, I'll leave all of these indicators in the description below. So the first thing that we do is we try to find a trend. We can see that there is this support area, there's this resistance area. We can see that there's an overall downtrend for Apple, and that there's this resistance area up here. We just keep that in our mind. Next, we find our Fibonacci levels. Any levels that are key to the price range that we are currently in. So we are at $143. So we'll use this Fibonacci level here, this one here, and maybe even this one above. And then we just turn that off, we hide it. Number two, we look for our support and resistance area. This indicator will find those for you. On our daily chart, we only see this one all the way up here, we ignore it. We go to our 4-hour. And now for our 4-hour, we can see that it gives us this area here. Why is this important? Because this is a Fibonacci level as well. So we'll chart this. We'll change the color. So when we refer back, we can see one is a fib level, one is from this indicator. And then we can do the same over here. And then we go to the hour chart. And we can see that we have this other level down here. And we can chart this as well. Now we turn that off. Next, we go to our daily chart and we find if there are any key levels for our moving averages. And the way we do this is we go to an indicator that has our higher moving averages. We can see that there's this one over here. And I believe this is the 20-day. Let's change the color for this as well. So we know now something very important. We know at $145, Apple might find some strong resistance possibly, because we have resistance at the fib level, we have resistance at the resistance level, and we have resistance at a moving average. Now we are all done. We go to our 5-minute chart and we look and see how important these levels are at a higher time frame. We can see Apple opened around 142.40 today. It found resistance, broke down, found resistance, broke down, found support, found resistance, broke down, finally broke above. We can see that when it breaks above these levels, we see nice moves. We see when it finds resistance at these levels, we see strong pushes down. We can look at the days before. We can see that Apple found some support here. We can see when it breaks above that, we see a nice push up. we can see that it came to this area that we spoke about before, where there are 3 resistance areas. And what happened? It had this strong push down of about 3%. This 3% push down. If Apple came into this area and you bought some puts, you could have seen a nice return. Same thing here. This area became a resistance level. This area became resistance. We found support here. And sometimes, of course, if there are strong volumes, it'll just break right below those levels, which is why we set our take profit and our stop losses in case those levels don't work. Sometimes the market is too strong, or sometimes the market is just too weak to hold on to those levels. But without these levels, if you are trading without any of these levels, then you don't know when a key area is coming, which is probably the #1 reason you are losing your trades. So if you want to become a profitable trader, you need to find key levels at the higher time frames. You can trade them at the lower time frames, but you need to find them at the higher time frames. And then that, along with our volume, and you will be an amazing trader. Your trades will double, triple immediately just by tweaking this. Find key levels at higher time frames, and the more conviction that you have will come from when you have more areas of resistance or more areas of support in the same general area. That's when I would take a bigger position. If you have small areas like this, just one resistance or one support area, then maybe just take a smaller position, see how it works out. Make sure you are looking at volume. Make sure you are trading stocks that have great volume on the day. Today there was just terrible volume all over, and it still bounced off of these levels. So yeah, that is all for this video, guys, today. If you want to know how to find the correct stocks to be trading so that there is this volatility and this volume at these levels, then check out, I believe, not my last video, but the video before that, where I say, or it's titled something like how to find stocks that will move. I'll try to tag it up above here. I'll leave the indicators in the description below. Thank you, everyone, and have a blessed day.